Drew Houston, CEO of Dropbox, thanks so much for coming in and chatting with us today on the back of earnings. Shares are up last I looked. Talk a little bit about where you saw the strength this quarter.
Sure. Well, we're pleased with our financial performance this quarter. We beat across all metrics. So we're seeing stability in the business. We've also made some difficult changes in the last quarter, so reducing our workforce to reposition ourselves for the future. And then we've got a lot we're excited about with our product roadmap and forthcoming launches.
I wanted to talk about those layoffs and some of the efficiency levers that you can pull, because you as a tech company were able to resist it for some time, longer than several others, but last month you finally announced you'd be cutting what was about 16% of your workforce. How much did that have to do with the macro backdrop and slowing growth, and how much had to do with the AI platform shift that you talked about?
It was both. So a lot of kind of different factors. So first is to be responsive to the macro environment, like a lot of other companies. But the second is really this surge in demand that we're seeing for AI. And certainly last few months, the interest and demand for this new generation of smart products has been skyrocketing. And so we're investing. We've been investing in that direction for a long time, but we're finding that the demand is a lot higher than we were expecting, and we want to invest even more, even faster. And so that was the second factor, which is a little different from the first. And the third is just driving operational excellence and tightening things up.
Now, you have been talking about AI for a long time, especially in your collaboration tools. What has changed? I wonder if you could explain that for our audience, because the generative AI shift that came with ChatGPT feels like it has accelerated things so quickly, but someone like you have been looking at AI and integrating it with your products for years. Can you maybe talk about that shift? Has there been more urgency? And clearly you're making this change on the back of the ChatGPT phenomena.
Yeah, so a couple of things have changed. So first is the technology's kind of been cooking for a long time, and it's finally ready. So you can build products today that you couldn't have built even 12 months ago. And so that's exciting for us, because then we can unlock all these new products and create these like magical new experiences in ways that we'd been looking forward to, but didn't have the building blocks until recently. And then second, as you were saying, just the demand, right? As ChatGPT launched and generative AI more broadly, it's captured the world's imagination, and so we see demand growing for these products a lot faster than we could have anticipated. And I think you could have seen the technology coming, but just the way that the interest went vertical is something that's way ahead of schedule from our expectations.
For sure. Are you guys developing your own generative AI chatbot type product inside, or would you pull that in from somewhere else, like a Bard?
So we are building our own AI-powered products, and we've been building in that direction for a long time. And some of the capabilities we build in-house, and some will partner. But one thing we're finding with ChatGPT is people are like, this is great, but there's a whole bunch of questions it can't answer for you, right? So if you ask ChatGPT, like, wait, what's my passport number again? Or who in my company, who in my company runs this project? Or I think there's like a PowerPoint I did a few years ago with this person on this project. If you ask it those questions, it's not going to give you an answer, right? So we see a huge amount of demand, or there's an even bigger unlock once AI is personalized. And these are the kinds of things that Dropbox can build, because after you experience ChatGPT, you want something that knows about you, knows about your stuff, knows about your company, and that's something that Dropbox is really well positioned to build. So we're really excited about some of the investments we're making on our product roadmap.
That's an interesting use case. I'm always looking for my passport number. So you're looking, part of the layoffs have to do with you looking for people with different skills for this new shift. But does AI eliminate any jobs completely? It's notable that IBM this week said that they were going to be freezing back office jobs because they can just simply be replaced by generative AI.
Sure. No, we're not replacing jobs with AI. We see AI more as giving like our existing people these superpowers that they didn't have before, right? So you're seeing all these kinds of co-pilot type experiences, and that started maybe with engineers, and then it's designers, but we're going to see all of us getting these co-pilot type experiences and augmenting our capabilities. So we see AI as additive more than replacing jobs.
Is it a mistake to replace people with AI?
I think it's a mistake to replace people with AI, or I think if that's the only motivation, I think when you can get more out of, or when you augment people's capabilities, I think that's a better way to think about it than kind of this zero-sum people versus AI type positioning.
Now, very early on, I think you were the first, if not one of the very first companies to be really intentful about your work policy in the wake of pandemic. You switched to a remote first model. You could have people come in, but it was remote first. How is that right now? How are people responding to it? And did that play a factor at all in how you did layoffs? So you hear about a lot of other companies laying off the people who haven't come back to work as a way to get them back to work.
Yeah, so our virtual first working model has been great. It's one of our highest rated, and when we survey our employees, it's the questions around, is our virtual first model working? Are you productive? Those are some of our highest ranking or highest rated questions. So that's working super well, and we're doubling down on that model. We wouldn't change much about the decisions we made there, and so I wouldn't say that had anything to do with reducing our workforce.
Right.
We're finding that model's working really well, and we're also finding that forcing people to return to office, to be like commuting again to a place that's half empty, to be back on Zoom is kind of a senseless thing.
So you're not, quietly pressuring people to come back in.
No.
But you guys also did an interesting way, but you had hubs so people can go in. I want to talk a little bit about your users. We've talked about this in the past. More than 700 million registered users, huge for any software company, but monetization has been slower. Would you call it a challenge? At just under 18,000 paid users, it's like 2.5% that you're monetizing. Can you speed that up? Are investors asking for that? How do you view that sort of monetization push?
Sure. Well, I mean, our monetization has been going really well broadly, and when you look at, we have tens of millions of subscribers, and so then we continue to grow, and we continue to grow our revenue per subscriber. So there's a lot that's healthy about the business, and that we're really proud of the scale we've reached. I mean, it's also true that our category has been maturing. We've seen headwinds from the macro environment like everyone else, and we also see huge opportunities to reach an even bigger audience with some of these new AI-powered tools and solving new problems for customers.
Do you think that your AI-powered tools will help you increase monetization?
Yeah, absolutely.
This is kind of a wonky, nerdy question, but I remember ahead of your IPO, you guys brought cloud infrastructure in-house when everyone was sort of going the other way. That helped your margins. I'm wondering if you could update us in the current environment, especially as competition intensifies between the hyperscalers. Do you think there's another price war emerging between them, and how do you think about that decision to have everything on-prem?
Sure. Well, it's worked really well for us, and you see our gross margins just continue to tick up pretty steadily, and I'm super proud of the work that our infrastructure teams continue to do and the creativity they apply to continue to scale up. I think everybody's looking at in the whole stack of all the AI capabilities, where the biggest business is going to be built, or where's the value going to go. Yeah, it's going to be super interesting to see. I mean, every large company, lots of startups, everybody's building these large language models. And so we're paying a lot of attention to that and doing a mix of building our own and partnering with others.
Is it going to be difficult for you to keep up, though? We talk about the NVIDIA chips all the time and how they're in short supply. Are you able to get those to advance your AI ambitions against when the hyperscalers are looking for them too and can buy them in larger scales? Yeah,
so I mean, we've had no problems with getting the infrastructure we need. We're still iterating on what's the right balance for us between the public cloud or partners and how much we should build in-house. But we're focused a little bit higher in the stack, where it's like, what can you really, in addition to how do you get the building blocks cheaply and scalably? I think the more interesting question for us is like, what kinds of magical new product experiences can you build? So most of our attention has been there.
Okay, great. Well, Drew, thank you so much for being with us.
Thanks for having me.
Talk to you again, hopefully next quarter.